Hello, 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 everyone. Happy Sunday afternoon. Well, at least my Sunday afternoon. How is everyone doing? Good afternoon, Davey. Good afternoon, Patrick. Good afternoon, everybody who doesn't say anything also. How is everyone? I hope everyone had a great weekend so far. We still got to do our market prep. I put up the weekly sector overview also, and you should go check that out when you have some time. Quick little synopsis. There's just not a lot of good stuff out there. The markets look like crap. The sectors look like crap. And we have an interesting week coming up. By the way, don't hold that against me. If you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, come back, leave some comments after the live stream is over, and please like or dislike the video. All right, let's get right into it. So, economic calendar for this week. It is a very busy week. Keep in mind, option expiration is on Friday. Okay, you got quad witching. Futures, that means futures expire. Options, you got it's technically back to triple witching, but it's still referred to as quad witching. Let's see where we sit. Consumer inflation expectations tomorrow. Tomorrow is a little quieter. You got Brainerd speaking. And then we have Tuesday really picks it up. PPI, 7:30 Central Time, 7:30 Chicago Time. You got the PPI, Producer Price Index, will be very important. Core PPI, previous was 8.8, forecast 8.6, and they're just regular PPI 10.9. So those, even if they slightly come in better, that's just horrible. And it's not going to change anything with the Fed. Speaking of the Fed is on Wednesday. But before the Fed, we have retail sales. Okay? And keep in mind, those are not inflation adjusted, so they can even be decent, but it could just be due to price increases, not people buying more stuff, just people buying more expensive stuff because the price went up. Business inventories at 9, which will be interesting, especially if we are starting to slow down. Remember all the crude numbers, 9:30, and then big thing, Fed interest rates, expect that 50 basis point hike. I do not think they will go 75 basis points. But remember, at 1:30 Central, 2:30 Eastern, the Fed press conference is the big thing, because if they change, they say, well, you know what, we're now going to 3 basis point hikes of 350 basis point hikes, so 2 more after this one at least. We're not considering a pause in September, or we're even considering a possible 75 basis point hike on the next one. If things don't improve, that could shake up the markets. So do not ignore Wednesday. Thursday, housing starts, jobless claims, building permits. So we could get some stuff. Jobless claims, unless there's a huge miss, not big ones, but building permits could be very interesting with housing slowing down. And Friday, we got Powell speaking in the morning, so he can further give more guidance depending on how the market reacts on Wednesday and Thursday. And industrial production, and then the Consumer Board leading index. So you got a lot of stuff going on. Just in case you forgot what Friday looked like, it was blood red. There's just a couple little things that popped up, but it was blood red. FOMC is at 50 basis point hike. This line isn't updated, but we still are in negative gamma territory. Earnings, not a very busy week, but tomorrow after the close, Oracle, it's still a tech biggie, so that could be interesting to see what happens with Oracle. And that's real. Adobe at Thursday after the close. I'm going to be paying attention to Kroger before the open, just because of inflation and the food and the supply chain still issues with that. So that's really where we sit. Happy Sunday, George. All right. Okay, so huge red day, down 288 basis points on Friday. Cycles on the futures on the daily still getting back into the bottoming, but not yet turning up. And weekly starting to roll over. You see, we had those doubles which got stopped out. And so it did enter the rotation zone. We got the pause, and then we just rotated down. So especially with cycles getting to that topping area and potentially rolling over, definitely watching for new price action. Yes, there is a potential bigger weekly double bottom, nowhere near triggering. Not expecting it to trigger this week, but it is on the chart because we have to pay attention. We did also get the close below the 62.5. So I'm expecting prices from a statistical probability set to at least return to 38, 56, 58, 56. Not that important. Right around here, 38, 55, 56. Right in here. And then probably retesting this low area. If it does break down, the major levels, 37.05, 36.02. Here's where we do the minor levels, though, to help us with it. And look at this, 37.58, 37.05, 3,700 to 37.05. So if we just have a crappy week overall, could we easily see 37.05? Yeah. If we had a week anything like last week. But those are the major projections. Hey, Dr. Michael, how are you this afternoon? So that's what I'm watching for on any rally. Remember, we can still get rallies. Key area I'll be paying attention to still with these harmonics from the swing low to swing high. I'm paying attention to about 4,000, 4,004. Overnight, I mean, we really sold off. So overnight, yes, we do have this little potential double for overnight price trading. But other than that, not much on the table. And where would that take us? Because that's on a 1 hour. So unless you're trading the overnight session, when it opens, there's nothing you're going to do. It'd be more interesting to see if it did trigger, if it got to the first or second targets before the open tomorrow. But look, even if it triggered, it would just take us back to the 4 hour rotation zone. Also keep in mind, you get back above here. For longer term viewers know we call this a clear path move. There are not many stopping points. So you can see the one little stopping point is right here, but that's only on a 15-minute basis. So you could get some little upside momentum should something happen and we really break out of this. Now, if we rally up and roll over again, this turns into a triple, then I'll be potentially watching for the breakdown. That's the only thing I'm keeping an eye on overnight. All right. If we start breaking down, as I said before, about 38.56 is my next major support area. Hey, Dan Jett, welcome. Hello, Anissa. Thank you again for being here. You're becoming a regular, like Dr. Michael, Dan Jett, George, Patrick, and Davey. And everybody else, I see you. I see the count on the viewership, and there are people who don't even come in and say hi. By the way, if you're watching on a different platform like Facebook, Share Vision, we stream this on Twitter, pop over to YouTube sometime and say hi. NASDAQ, again, we closed below 62.5. I'm focused on NASDAQ returning to 11,671 and then possibly 11,486. Just a brutal day. This did also now technically form the bigger double, but we're a long way off. So it's just on here for completion purposes. If we did get some really weird rip your face off rally this week, I would doubt it would even get close to triggering. But we have to be consistent. And by the way, if we are going to trigger this and we put in another low here, I will use whatever side is the conservative targets. I will not use the aggressive targets. Why? Because we're going against the higher time frame rotation zone. So you see here, rotating up and then back down, getting caught on that rotation zone, which is why we use that rotation zone concept. Taking a look, also just like the S&P, you have the little double to play out overnight above 12,000, 12,077, 21,114, 21,152. Also into an advanced clear path or just a regular clear path move with that little 15-minute stopping period area right by the first target. So that's, again, only thing, but that literally takes us back to that 4-hour rotation zone for another potential rollover. Am I expecting that to be able to complete the targets? No, I'm not, unless there's some shocking news that comes like out of Europe on the European opening session. Hey, Lauren. Thank you for being here, Lauren. Another one of the longer term viewers and a great supporter of this channel. We break down below Friday's lows. My next major target's 11,673. You know, if you wanted to use the minor targets, I didn't put them on the S&P, but you could just remember, part of the goal of this channel is to get you to be able to play along at home and set up your charts the same way. And see, even if you use these longer term harmonics, it's just in front of this 87.5%, this 11,670 area. That's why I'm not really bothering. If you want to use the most recent swing for very short term levels, then the most recent swing would be from this price action on Friday. So then you could say, okay, I'm going to watch the intermediate level of about 11,784, see if we get some support there right around this little support area. Let's see. Hey, Options 22, another longer term member. Did I say hi to you, Options 22, already? I know I said hi to Lauren. Thank you for being here. Dow also closing below the 62.5. Not yet to the 75, so we don't have a potential double in the Dow yet. Pretty much the same analysis. This does still qualify as a little potential sloppy double. That's the last one I'm looking at, though, with the Dow. So that's about 31,580, 31,832, 31,907, 31,983. Again, where would that take us? Into the clear path back to the 4-hour rotation zone. Well, I'm glad I got to say hi to you. So, hey, AP's World. Thank you for being here. Oh, finally, we can get started. Waka Waka is here. I was getting worried, Waka Waka. Hey, George, you looked at ARC Thursday. We're now within 0.75 of the sell signal. We could take another look at ARC. So, again, no potential reversal. I'm still focused with the Dow longer term hitting 30,941. And let me put the intermediate levels if we break down. But these won't necessarily be for tomorrow. But I'm just going to get them on the chart. So if we have another major sell-off, my major support cluster would be about 29,873 to 29,804. Still from that statistical probabilities, watching for the Dow, 30,965 area, and then 30,570. Yeah, you're in the house. Something tells me it's going to be a green day tomorrow. It might very well be green. We already went over. There's not much coming out. But even if we bounced, it would be just setting off on a slight bounce, rolling into PPI. So, again, cycles on the Dow at the bottom on the daily and on the weekly. You see rolling over in that rotation zone. Weekly, not yet at the top, but starting to rolling over. So they can easily be dragged down with current price action. Russell actually has held up the best. That double still isn't technically stopped out on the Russell. But with this price action, pretty much looked like a breakdown flag pattern triggering this sloppy double top. So I'm watching for the Russell, which did hit the stop reduction target. So that's officially over on the close below 1781. But we also have the double top in play with the full target being 1747. So I'm still expecting this to go lower even if we do bounce. Like Waka Waka is expecting the bounce tomorrow. Even if we do, still watching for the next rollover. No potential double on the Russell. The DAX, this was brutal. DAX just getting hammered. So at this point, breaking out and then breaking back down, I'm now expecting if we reverse these harmonics, That's why the statistics, it should have pushed slightly higher than it did, but that's one of the instances where it was the 30% that didn't. I'm expecting now for the DAX to retest 13,457 area. Crude, I did this in the sector overview, starting to watch with the daily cycles rolling over, the weekly cycles at the top trying to roll over. I'm starting to watch for a bigger pullback, which means move up stops even more aggressively in oil plays because we could start getting that bigger pullback again. I wouldn't just be exiting because crude is still statistically favors one more slight push higher. But if we do start rolling over sooner rather than later, I'd want to preserve some profits in there. The key, I'm just watching essentially a Friday's low. If we break below Friday's low, then my next area is back to 115.50. Don't expect much with Fed and PPI option expiry. Too much going on, but I think we'll start green in a week and then be bloody. Yeah, I could definitely see that happening. And PPI could definitely tip stuff. We got the Fed rate hike on Wednesday, and then options are gonna, you get all the games going on with quad witching, so it's gonna be brutal. Hey, Christoph, not expecting anything good for next week. You, not overall. I'm expecting a lot of volatility. So expecting a lot of volatility. It's just not with options. I mean, I went through in the beginning everything that's happening this week. Monday's the only really quiet day. It'll be interesting now to see this sharp move with gold, if it can really start to get a move on. I get super interested again, really more bullish. This was getting the breakout play, but if we can get above this 1921 harmonic, we cut through into an advanced clear path move. So we could really start to see gold getting a move on if that happens. That's what I am focused on. By the way, notes, which were just brutal. Utilities also, I went through in the sector overview, got crushed off of this move in notes. Remember, utilities are very interest rate sensitive. So hitting the next 116.25 and a half harmonic. Next one below there is 116.11. Even with any rally, we still have a potential double, but even with any rally, my major resistance is now 117.08. I'll go over why I'm also not seeing a lot of broad strength. Dollar index coming up, almost completing the double. Closing above the 62.5, so statistically we should try to retest 104.59 even if we have a little pause. And we have the full double target just higher. And this is possibly setting up for another double top, but a long way off from triggering VIX. The only thing that got interesting is that end of day sell-off in the VIX. End of day sell-off in the VIX was interesting considering we didn't have a big bounce. So I'm going to be paying attention to the VIX early in the morning to see if that's giving any telling signals. Let's take a look at Tesla. Tesla still little bounce, not closing below the 62.5, and that little post-market bounce, but that weakened quickly with that 3-for-1 as Waka Waka put in. Where was that? Tesla 3-for-1 split. These things are getting less and less juice. Also, Ellison leaving the board. And I think there's going to be, coming up, as I said, I think there's going to be some surprise announcements that really end up hammering Tesla coming out in the next little bit. So I am very, very cautious. Even on a rally, there's not much that I can get super bullish on. The key area for me is if we do pop back above about 706, then I'd go back and target about 727 and then 750. That's just short term. And you do have a gap still here. So you can see this gap from the close on June 9th to the open. And it did try to fill it to, sorry, this was the close, but it didn't fully fill it. So there is a slight little gap there. Other than that, not much for me to be bullish on. Let me get to the Qs. And the spiders, Qs, again, that double is over. We do have the gap, so on any rally, that's the only thing. I have the gap fill play. Other than that, statistically closing back below the 62.5. So I'm focused on a return to 284.35 to about 280.21. So if we do get that little green rally, I'll watch for rollover sell plays going into this week. The 10th, so Friday's high is going to be very key. That's going to be the key area right now. There would be an aggressive early morning buy on the first 4-hour close if it did close above the high, but that would only be for a very short pop play, with cycles on that 4-hour being where they are at the bottom. And the daily at the bottom, but what's interesting, the weekly still topping. So weekly takes precedence over all of it, and you see running in that rotation zone and rotating lower. Here's your new levels. So if we did break to new lows, 275.92, then 271.62 would be my major key levels for that. SPYs, again, rotating down, closing below 62.5. Everything sounds like a broken record because it is. 385.25 to about 380.54. Then your next key levels are 375.93, 371. But I'm expecting a return to this low area. Cycles at the top, trying to roll over at the bottom on the daily, but not yet turning up. Anything above Friday's high would just be a potential short-term gap play to the cross of the daily rotation zone. Oh, wow. So there's your big gap in the one-day SPY. There could be a gap fill, but that's going to be hard. I mean, going in, unless the PPI numbers come in way better and we get a multi-day rally, like a Monday and Tuesday rally, that's going to be tough to do. Yeah, I mean, this could be a great week to sit stuff out unless you have high probability plays. And in that sector overview I sounded like a friggin' broken record because there's only like 2 potential things I'm looking at. Maybe 3 in the whole market. That's brutal. So this is not the time to get TomTom stock all-time high coming? No. 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 Even if we got a rip your face off rally, all-time highs aren't coming. Not in this macro environment right now. And everything long-term, we'd have to get a lot of stuff out of the way, and it's just not there yet. Let's see. I mean, let's see. No, it's saying don't fight the Fed any way up. Same goes way down. Fed is going to be way more harsh this time around with inflation. So I completely agree with what Waka Waka put in there. Even I think they're being too dovish now with these slow rolling the rate hikes in QT. You got to take this out, you know. I mean, we need rates a lot higher, or we need to be in a major recession, which I think we're getting to a lot sooner than most people think. So, hello, Wizit. How are you today? Tesla, you go 50-50. I think we're going to, even if we get a rally in Tesla, it's going to be another major rollover play. Will FOMC and option expiration cause a rally? I mean, FOMC is still baked in. The big thing with the FOMC, as I said in the opening, is the press conference afterwards. Unless they shock with a 75 basis point hike, no. But if they start saying, hey, we're putting 75s on the table, or if they're saying there's a complete pause and September's completely off and we're definitely doing 50 basis points in the next 2 meetings, so that would be July. Remember, they skip August. So July and September, and if they say, well, then we could be going with more 50 basis point hikes, that's gonna, that's bearish for the market. I don't think they can lean dovish. Waka Waka. We should just have Waka Waka run the show at this point. FOMC based on CPI says J-Pow is going to be more aggressive. He's got to be. This inflation's getting entrenched, and it's going to hurt really bad. Let's peek at Bitcoin real quick. Yeah, Bitcoin getting. Well, I was keeping an eye on that. There was some There was a lot of fun wash trading going on in some exchanges this morning. What I'm talking about, there was a little tried to be a pop up move. Like right here, I had the F1 race. I had recorded it from earlier. I had the F1 race. I was watching the replay while I was doing some work, and I'm like, all right, ignition bar. Let's see how high they can get it. And then there was all this friggin' wash trading going on. But then look at this. This is why you just got to follow the patterns. Let's put on these targets. And then trigger to double first, second targets. Even if you went off the conservative ones, it hits all three, but I'm still watching these. I'm still watching this to roll back over. But on the bigger macro, the day is not over yet, but you close below about this 27,980 area. It's below the 62.5, so that favors a retest of this low area. And then a possible break. Ethereum, ugly. I'll show you also. I just have up for giggles. Even though this spike up technically invalidates this, not this, but this spike up came technically too close to this head. That could actually be traded as a double. It's just not reversing much. I'm watching its targets. So my next major target is 1231. Then I'm watching 955 and then possible returns to all the lows. That would be something else, wouldn't it? So Ethereum also rapidly unwinding, but Bitcoin could really crap out below. And remember, you start breaking below this 25, it's going to get interesting real quick. And 20, what is some micro strategies roughly where they get hammered? About 21K. So this could get real interesting in the crypto market coming up. And until we get rid of these stable coins and their crap backed stuff that just props everything up, then we'll get finally the flush out moves. Fed, they feel like the Fed will do it. They're not going to cut. Fed's not cutting. They're hiking, and they can't. All right, if they did do only a 25 rate hike, first of all, if they destroy all their credibility right there, and yes, the markets would rally then, but guess what? You'd have inflation so entrenched longer term, the pain would get massive. They can't get farther behind the curve than they already are. So no, I don't agree. That would be shocking, and that would actually blow their complete credibility. Because why? We had super hot CPI numbers coming out last week. They've already stressed they're doing 50 basis points, and then they didn't do less than that with super high CPI. Nobody'd listen to them anymore. They've already blown their credibility in a lot of circles, but that would just completely obliterate it. Hey, I agree. First, it's going to get 20. 20 is a pain point, and then once we start getting some momentum below there, I agree. I see 10. Hey, Sashi. Yeah, my next major target is Bitcoin 20K, and that's going to be the big pain point. I want to see how it starts reacting there. I don't think they're going to be more aggressive than 50 basis points, unfortunately. I think they should be more aggressive. I think they should be shocking the market with a little 75 basis point. SMH is probably my sector with the most bearish momentum. What do you think? Yeah, I went through that. SMH, the semiconductors, breaking down brutally. I mean, that was down 741 basis points in a week, so 7.41%. And we have this major topping play, and it could not get to remember we had that little double trigger and then the rollover move. This is not a strong chart at all. And then shorter term, we closed below 62.5. So yes, that's one of the places to look for rollover plays. And because you do have a little larger term double, but I don't think that's going to trigger, but it's on the chart for completeness. So that's one of the weaker sectors, yes. But real estate, you know, you can watch the sector overview, but nothing's looking good. By the way, let me jump to something else. Just want to show, not the ratios, sorry, the key internals. So you have stocks, percentage of stocks above their 5-day average. Let me switch this to a line chart. So you see that's in, so we could get a slight little bounce, but you start looking at the bigger picture, like stocks above their 20-day average. When we start to put in some more bottoming price action, that's around below 20%, maybe 22%. If you're going to get a little conservative with a line, let's just say there's a range down here. We're not there yet. So do we have longer? Can we, even if you got like some micro bounce on this, is there still more room before we put in another bottom attempt? Yes. So that's your above the 20-day. Above the 50-day, recently it's still got room to run to the downside. Okay. So we start getting a spike, one more major push lower, and then it could be interesting. And then this is just trading down. But before we put in a major bottom, I'm still watching. Now, this is not just necessarily for this week, but we have a long way to go and a short time to get there. No, but we have some more pain. But the real one I'm focusing on this week is to see where if the weakness spikes down into this range, and then we start trying to bottom out with option expiration. The ratios, by the way, value growth, even though value growth, there's not a lot of great growth stuff out there either. That's the other problem, but there's tipping back over into the value favor. But there's the other problem is value is still, there's a lot of stuff that's not a good value. And you can see both these ratios doing the same thing. Mega caps also rolling back over. So I'm expecting a fair amount more pain in growth and mega caps coming up. All right. You could see a ton of pain still coming up in Bitcoin. A ton. Yeah. So I think it'll be forced to sell. I thought it was around 21. If too many people are bearish, won't market be going higher? You do get those rallies, but yes, we will get rip your face off rallies, but that's very different from going to new highs. And long term, we're nowhere near a bottom. So yes, we will get rip your face off rallies, but so far, I mean, the rallies have been, they've even shocked me that if you start looking at the weeklies, I mean, we managed a 3-week rally and then a 1-week rally. This was at least slightly rip your face off-ish. So, and we will get those rallies coming out of nowhere. There'll be something, maybe something will happen to Putin and something else, and that'll shift the stuff with Ukraine. If something happened there, it could trigger a multi-week rip your face off rally, even with Fed hiking. But then it would just set up for another sell signal. Yeah, that's pretty true. It's based off and inflation. I mean, and it's where the Fed has to step in, but these inflation numbers are brutal and they start hurting. I mean, profit margins, if you start looking at stocks from a fundamental perspective, these kind of you can only pass so much on the consumer, and these PPI numbers have been brutal, and we're going to get more on Tuesday. They're having to compress margins, and there's not a lot of room to pass stuff on to consumer in this inflationary environment, especially with energy and food. Now, we start getting a little reprieve in energy. It it might do something. But even if you pulled back into your weekly rotation zone with crude, even if you pulled back to the bottom, that would still be oil above $100 a barrel. Oh, what's interesting is if crude, like the Ukraine stuff, went to an end, like ended, and then crude triggered this massive weekly double top, which is a long way out from triggering. Yeah, you get oil back down to $70 a barrel. Uh, it could start putting a dent in things. But again, that's going to take a while to ripple through the economy. But would you get a rip your face off rally if stuff started happening like that? Yeah. But also, if you triggered something like that, you're going into probably a major recessionary slowdown too. Why don't I think Fed will announce 75? Because they are so adverse to literally shocking the market. I think if they're going to do 75, they're going to announce it that they're going to consider it for, July if we don't get better inflation figures in. They put it on the table first. That's our Fed. They're wussy namby-pambies in my book. Yeah, MBS already got hammered. The MBS market, which is mortgage-backed securities, by the way, if anybody doesn't know, the mortgage-backed security market, there are some cracks starting to form, some really bad cracks based off of stuff from this last week. It is not looking pretty. Does that mean housing will take a dive? No, I think housing is going to take a pullback, but not necessarily a dive. But if the MBS market really starts to cracking open, you could see rates start to push again higher. And even with limited supply, it could get interesting then. What do you think about CMG? I mean, they're starting to roll down. CMG, I'm expecting. I mean, this is starting to break down below key support here. CMG, I think there's been one less push with the consumer still. I'm going out to eat. There are no lockdowns going on. I'm going out to eat to get me some Chipotle, to get me some whatever. I don't care if gas is right, but you start getting to the end of summer. I expect CMG's. It'll be interesting their second quarter earnings, but third quarter, I'm expecting it to start getting ugly. And still, if you look here, look at this. It'll start breaking down more. I think some of these things are still getting propped up because consumers are finally still, hey, it's summertime, I want to go out. I'm going to go grab some lunch at Chipotle. I'm going to go back to some places I haven't been to a lot. And yeah, and it's cheaper dining still, so I might not be going to a steakhouse, but I can still afford, even with inflation, some Chipotle. But longer term, I'm really expecting this to easily return to under $1,000. BKNG. I mean, this will break down too. I do not know why this hasn't broken down to the extent it has yet, but this to I'm expecting this to again retest its 200, break the 200, and then easily get back to about 1779, and then really start breaking down from there. Don't have a reason on that one. Likely now just no pause, so carry on with 50 basis point, 75 basis point means mortgages will rocket, credit cards will be expensive, lending will die. Rich says 75 basis points, and after that, a full 100. Doubt that'll happen. Rich, I agree. Market has a lot more area to fall. Thank you for being here, by the way. I do agree with you. What he's talking about, this is one of my favorite longer term areas. Now, whether we might get a rip your face off rally before the S&P gets there. The Nasdaq, that will be the first one we're going to see hit that 200 week. All right. We'll get a capitulation move, and then we'll get that rip your face off rally. And then we'll get another rollover play. It's just the timing, and timing are hard in this markets, especially when you got volatile weeks like this. The only person who knows where the bottom is Putin. No, because you got so many. Even if that went away, yes, that would trigger a rally. But you know what? Inflation wouldn't just disappear. It would free up some stuff in energy, but it's not gonna. You still have all the fertilizer issues, all the food issues. It would just free up some gas prices, which would be a relief to the consumer. But you got entrenched inflation, especially hitting into the services sector. All right. So, just tell me what you want me to specifically look at, Raj. Oh, by the way, just in terms of oh boy, I'm sorry guys, I'm feeling a little tired today. We triggered this double top, so I'm expecting these the 10-2 spread to go back below zero, which is again, we've already triggered it, but it's again another sign of return to that inflation recession indicator. We're just on very different pages, Tom stock. Do I think long term? I think we get a 35 to 40% correction, yes. Stocks are not cheap yet. Not when you're going to start getting compressed earnings. You have the PE ratio still pulling back in, but the price to sales ratio is not cheap yet by any means. And the PE ratio, even though it has come down, you start getting earning compression with the inflationary pressure and higher cost of money. That jacks it up, even with stable stock prices. So then it rolls over again. I've been through multiple bear markets, and it's, this is the same thing. People try to call the bottoms too early. And yes, we will get those rip your face off rallies, but everybody still piles back in, and then you get the rollover play. Hey, Peloton's still not at zero. Peloton will get bought out before it hits zero. Peloton will easily get bought out because of their base. They have such a strong user base that they will get bought out before it gets to zero. At some point, it's attractive enough for a big player to step in and absorb it. It's just not attractive enough yet. All right. And again, Waka Waka still more bearish than me. I'm targeting first Apple 100, and then we'll see. What were you looking at? I mean, market cap for Peloton is, this stock still. But before it hits zero, you will see a buyout offer for this. It might be trading $1. Oh, Tesla market cap? You have a long way to drop still on Tesla, too. Long way. Where is it market cap? I got tired of looking at it. It's only right now 721 billion. All right. Oh, he thinks it'll hit 2,500 by the end of the year. Not in this environment. All right. Oh no, we don't. No, 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 not Kathy. By the way, I forgot to look at ARC again, rolling off the weekly rotation zone. ARC's close. I mean, ARC's going to round trip this to the COVID lows in the next before this year's over. Rally into a weekly rotation zone, rotating back down. I got to take a look at this daily chart though. Close to back below the 62.5. Be interesting. All right, everyone. I'm gonna wrap it up. Gonna get a couple hours of. I still got some more work to do. By the way, in Discord, I put an interesting Stan Drunkenmiller interview off you that got posted on YouTube yesterday. I put it on the Discord channel under articles. If you're not a member of this Discord, please consider joining it. It is, there's some interesting stuff going on there. So I definitely recommend to check out that interview. It's pretty interesting. You are welcome, Anissa. You are welcome, Waka Waka. I'm shorting the glasses right off Kathy's face. Thank you, George. With that, what else I have to say? Everybody have a great week. We'll reconvene at 8 a.m. tomorrow. Thank you for being here. By the way, what I was going to say is Discord, if you want to join, there's a link in the description below. So please do consider joining. You are welcome, AP World. Again, thank you all the new people who are here who continue to show up all the time. And if you haven't already, sometime before the open tomorrow, I'd recommend watching the weekly sector overview. With that, again, thank you for being here. I'll talk to everyone tomorrow morning. Bye.